Modern crypto has found a home far from the garages of Silicon Valley. Today, the epicenter is Dubai, a hyper-luxurious playground where founders and venture capitalists operate within a highly insulated, insider-driven culture. The wealth on display is often baffling. Founders acquire fleets of supercars and million-dollar watches made of plastic, even when their companies have failed to produce a single viable product. Traditional tech companies have to earn this level of success. Generating billions usually requires a functional piece of software, a growing user base, and a clear path to revenue. In the Web3 space, investors often view actual revenue as a liability. Real numbers ground a project in reality, providing a measurable valuation that can act as a ceiling for the hype. This environment allows Layer 2 networks and meme coins with zero product market fit to raise tens of millions of dollars in venture capital funding. Founders generate this generational wealth by extracting capital directly from the public through the token launch mechanism. The entire system is built for speed. While exiting a traditional startup takes a decade of scaling and audits, the crypto token launch offers venture capitalists an almost instant exit with very little friction. To manage these exits, they hire market makers. In traditional equities markets, these are regulated entities that provide liquidity, ensuring there is always a buyer or seller available to keep the market moving. Crypto has transformed the market maker into a hired mercenary. These entities use their own capital to manufacture fake trading volume, creating a digital illusion of human demand. This chart illustrates the technical reality of liquidity ranges. Market makers programmatically supply cash within these rigid price boundaries to temporarily prop up a token's value. Sophisticated investors fund ENFI projects because this manufactured volume guarantees them a return on investment. They can sell their stakes to the public long before anyone realizes the product is hollow. The documented collapse of the Movement L2 token provides a rare look at this playbook in action. It was a project that launched with a massive $38 million venture capital war chest. Beneath the hype sat a secret contract. If the token hit a $5 billion valuation, they were authorized to liquidate the supply and split the profits. The execution was clinical. The day after the token launched, 66 million tokens were dumped onto the open market. The market makers instantly pulled their liquidity out of the predetermined range. Without their capital propping it up, the artificial price floor vanished. Retail investors were the intended victims of this collapse. They functioned as exit liquidity, allowing the insiders to walk away with millions. The move collapse is the standard operating procedure for the modern crypto landscape. This cycle of engineered Layer 2 networks starves real software builders of resources. Legitimate products take years to build, and they can't compete with the speed of a manipulated token exit. This has sparked a countermovement. Developers are attempting to bypass the corruption by returning to the original, fair launch ethos that defined Bitcoin. They are building around non-arbitrary tokens, or NATs. This is a new class of digital asset where the supply and distribution are removed from the control of founders or VCs. The generation of a NAT is hard-coded directly to the thermodynamic data and block creation of the Bitcoin network. It uses the physical work of the network to determine its existence. Tethering supply to Bitcoin's physical output eliminates the traditional insider edge. This system removes the ability for founders to grant themselves pre-mined allocations or negotiate the secret backdoor deals that facilitate a coordinated dump. In a market engineered for insider extraction, the retail public functions as the final product, providing the exit liquidity for those who engineered the launch. In the end, the only real protection is a system where the math is more powerful than the insiders.